When we spoke here a year ago, your big calls for 2011 were wage stagnation and also social unrest, as well as rising prices. We saw all of it play out. What is your call for 2012?
It is more problems of sovereigns, fiscal policy, public debt in advanced economies. Certainly, the Eurozone is a fiscal train wreck. You're going to have more countries, in addition to Greece, restructuring their public debt. There is problems of lack of growth, lack of competitiveness that are severe in the Eurozone is entering another recession.
And you have said that Greece risks a depression at this point. You've used that word. But S&P came out this week and said, although we'll likely see a Greek default, that does not mean a domino effect, especially for pig nations. Do you disagree? Is the risk greater than they're calling it?
Well, in many of these countries in the periphery of Eurozone, Greece, Ireland, Portugal, Italy, Spain, Cyprus, you have large stocks of public debt, you have large budget deficit, and now the fiscal austerity by raising taxes and cutting spending makes the recession worse. And if you have a worse recession, you're trying to stabilize your debt as a share of GDP. If your denominator's GDP is free falling, you look like insolvent. So in my view, Greece is going to be, of course, but it's not a domino. It's that the fundamentals are bad in Greece, but they're bad in Portugal, they're bad in Ireland, and they're weakening in Italy and Spain.
You've also said that the Eurozone needs a reality check. They're in denial that some of their members are insolvent. So I'm wondering, Nouriel, your perspective on what the best potential path forward is for Europe. We have Angela Merkel here, David Cameron, we have Timothy Geithner here from the United States. What should they be talking about and doing?
Well, in Europe, right now, you need less austerity and more economic growth. And to get more economic growth, you need to avoid the fiscal train wreck. You need, first of all, easier monetary policy by the ECB, lower policy rates, more quantitative easing. You need someone to provide lend of last resort support to the sovereign, whether that's the ECB or the EFSF or ESM or IMF, a combination of all of them. The value of the euro has to fall sharply to restore the competitiveness of the periphery of Eurozone, and if the periphery has to do fiscal austerity that is recessionary, then the core of the Eurozone has to do fiscal stimulus to jumpstart economic growth that entering recession, even in France, even in the UK, even also in Germany. So we need to have growth in the Eurozone, because without growth, eventually, it's not going to be sustainable.
Less austerity, more stimulus.
Yes.
The IMF just this week sharply cut its growth forecast for 2012. You said back in October what the Eurozone needed was a $2 trillion bazooka. I'm wondering what you think it needs now, given this new outlook.
Well, they need a bazooka because without official money, the risk of something disorderly is higher. That's part of the solution, but you need also monetary stimulus, you need a fiscal stimulus, you need a weaker euro to return to economic growth. Because if you're not going to have economic growth, those debt ratios are going to explode, and many more countries are going to be insolvent, and eventually many of them are going to decide to restore growth, competitiveness, and their external balance by exiting the Eurozone and going back to a national currency.